You can go with the flow when it comes to investing, continue to deal with the income outage of bonds, or discover the power of dividends with higher yielding sectors of the S&P 500. Like utilities, XLU can transmit the benefits of equity income to your portfolio with liquidity, all-day tradability, and transparency. Ready to plug into a different source for income? Before investing, consider the fund's investment objectives, risks, charges, and expenses. Go to sectorspiders.com for prospectus containing this information. Read it carefully. Visit us at sectorspiders.com.
I'm DeLegge with ETFguide. Welcome to another episode of Marketplace Minute. I told you I would pay you $100 for every single portfolio that I grade that gets an A. On today's show, we're going to look at one viewer's portfolio, all the intimate details. And I'll break it down for you. We're going to give him a final grade of passing or flunking on today's show. I'm really looking forward to it. So let's get into all the specifics. We've got Jacob in Evanston, Illinois. He's 46 years old. He's a software engineer. He's married, and he has sent me his portfolio data. We're going to break it down in 5 key areas and give him a final grade. So let's begin with explaining to you what his portfolio consists of. It's a $725,000 taxable brokerage account. Let's begin by taking a look at the first category, which is diversification. And Jacob's portfolio currently consists of 2 ETFs, 2 mutual funds, and 16 individual stocks. Now let's talk about the ETFs. He owns ticker symbol XLK, which is the Select Sector Spider Technology ETF, and then QQQ, which is the NASDAQ 100. He owns the Fidelity Magellan Fund, ticker symbol FMAGX, and then the Janus 20 fund, and then all of the 16 individual stocks. Can't go through them all individually, but let's just say most of them are focused on the technology and biotech sector. So from a diversification standpoint, unfortunately, Jacob's portfolio does not pass Ron's grade. The reason is he's missing some exposure to some major asset classes. He's got no exposure to emerging market stocks or international stocks or commodities or bonds. He's got a little bit of cash, but he's got to do a much better job on diversification. Next up is cost. Jacob's investments, thankfully, have minimal trading activity, which is good from the perspective of, well, those trading commissions aren't devouring his money. So from that angle, that's good. Now, on the cost of his mutual funds, both of them are no-load funds, which is excellent, and also the expenses for those active funds relative to other active funds is relatively acceptable. So I think on cost, Jacob's investment portfolio does okay. Next up is tax efficiency. In other words, does Jacob's investment mix, is it creating a tax favorable situation? Is it minimizing the impact, the negative impact of taxes? So Jacob has this $725,000 taxable investment account, and unfortunately his current mix, I don't think, does a good job of limiting his tax liabilities. Now, I think someone in the 35% tax bracket should at the very minimum own at least some municipal bonds, which throw off some nice tax-free income. That could also diversify his portfolio. He owns no bonds. So I think that's something Jacob should definitely think about. Also, that Fidelity Magellan Fund and the Janus 20, not too smart tax-wise. Those both are active funds and tend to have higher tax liabilities versus just going with a low-cost index ETF that has exposure to U.S. stocks. So on tax efficiency, he can do a better job. Up next is risk. So Jacob describes himself as an aggressive investor, and I think his 100% all equity portfolio definitely represents that type of investor. But it's one thing to be aggressive, smart, versus aggressive and dumbfounded. And I think, unfortunately, Jacob needs to be smarter about the level of risk that he's taking with this portfolio. Most of his assets are concentrated in technology and biotech stocks. So I think he's got to definitely add some other areas to the mix in order to be aggressive, smart about his overall strategy. Last up is performance. So how does Jacob's investment performance compare to the market? Well, over the past year, he gained 17%. But the Vanguard Total Stock Market ETF, over the same time frame, gained 20%. So Jacob underperformed the market, and from a performance perspective or angle, that's not good. So Jacob's final portfolio report card is a D. Again, he did not do good on diversification, tax efficiency, or risk. He did okay on cost, but Jacob's got some homework to do. Regroup, go back to the drawing board, and reformulate your investment strategy, Jacob. Thanks for taking Ron DeLegge's portfolio report card. If you'd like to get your own portfolio report card and have me pay you $100 if you get an A, get in touch with me, rond@etfguide.com. You can also tweet me at ETFguide. I'm Ron DeLegge. Thanks for watching another episode of Marketplace Minute.